Thanks for tuning into this earnings conversation with the management of Mindtree. They came out with the numbers yesterday post-market hours, and compared to almost all estimates, which is revenue or all line items, revenue, EBITDA, profit after tax, they've done much better than what the street or what the Bloomberg consensus estimates were. The question is, as I've asked to almost every large IT company, is can this momentum continue, or was 2020 a bit of an aberration due to the year that it was and pent-up demand and more? Venu Lambu joins in right now to talk about that. Good having you, Venu. Thanks for joining in. Hope all is safe back there in UK.
Thank you. Everything is fine. Thank you.
Great. What about the quarter? It seemed rather strong. Can you tell us what clicked? And also, it's something that I like to ask at the beginning of the quarter, when you would have looked, say October 1st week, when you've looked ahead for the quarter, did you anticipate such a performance, or some things fell in place almost automatically?
Firstly, thanks for having me here. Yes, it's been a great quarter for us. We grew the revenue sequentially at 5%, increased profitability significantly at EBITDA and PAT level, and on top of it, we got the best CSAT rating as well from our customer survey. Coming to your question and saying that was that a surprise to us? No, it is actually the strategy that is getting played out. Which we initiated at the beginning of the year. And even when the COVID crisis hit us, we continued to stay invested in our strategy. We stayed very close to our customers. I think our previous commentary was also about, that we have a good growth momentum, and, we'll continue to do that. I think that's what is getting played out. And we thank our customers and, all the Mindtree minds for a great quarter.
Yeah, I think one standout feature for you, as well as likely for a lot of the top tier IT companies, has been that in what is arguably not usually the seasonally strong quarter for operational performances because of wage hikes, etc., the performance has been pretty strong. What's driven this EBITDA performance for you? And can you tell us a bit about whether this can be sustained, depending on how much of wage hike has already gone through, how much would come in, and seasonality, etc., that would play out as well in quarter 4 and maybe a couple of quarters down the line in FY22?
Sure. Firstly, the EBITDA improvement is a combination of more than one factor. There has been a significant process efficiency that's been driven across the organization. If you look at our utilization has increased to 83.1%, and we still delivered the sequential growth of 5% with that utilization. So I think we are at a very mature, in terms of the process operations. The second is, we also had, a lot of work that actually moved into the offshore as well over a period of time, and the remote working did help us. And there is a small, percentage that always comes in when you work remotely, and the SG&A reduction part of it as well. And of course, the revenue growth does help in getting your bottom line stronger as you go along. So we did increase our revenue contribution as well. And in terms of sustainability, I think as we said in our analyst commentary, we are confident of keeping up our sustainable profit growth agenda across the company. So we will remain focused on that, and we are confident of sustaining 20+% margin as we go along. Sorry, I can't hear you.
Yeah, no, the reason why I kind of stress upon this is that even post your call, right, when I hear the commentary from analysts who track you very closely, because margins are at 11-year highs, if I'm not wrong, some people believe that this sharp uptick in utilizations may come off. Wage revisions as they come in may impact margins, and therefore these are not sustainable. There are, of course, others who believe they are. What's your sense?
Yeah, sure. Look, there are headwinds, and we did acknowledge about this headwinds in terms of the wage increment is one headwind, because we did give the increments across the board effective January. So, we spoke about that headwind as well. But at an overall company level, can we sustain the margin at 20% plus? Absolutely, yes. We can.
Okay. Now talk about deal wins, because that's the other very impressive part of your quarter, right? You've hit a milestone of sorts. I mean, I don't know if you consider it a milestone, but it's been spoken about as one. Is this a sign of things to come? And the new strategy that you put in, right? Because you spoke about it in the analyst meet maybe in December 3rd or thereabouts, if I'm not wrong, wherein you outline a strategy, you create a deal pursuit team, etc. Talk to us a bit about that.
Yeah, sure. Look, I think having a $1 billion contract signed in the first 9 months is definitely a milestone. It's a milestone that we can aspire to beat it as we go along. And again, this is a result of a very sustained effort of implementing our 4x4x4 strategy and being very close to our customers. And most of the deals that we spoke about has come essentially around the three areas, right? Either we have enabled the customers in enhancing their revenue play by digital interventions or digital transformations. The second is either we would have actually done a significant cost takeout agenda for our customers, especially in these times that plays a significant role. And the third is we would have helped our customers entire value chain, right from the supply chain as well as the customer network, dealer network. How do they work remotely, productively, and efficiently? So those are the deals that we are seeing, and we are confident of continued deal momentum in our pipeline.
Yeah, can I ask you if you believe that this was a result of for the industry at large a bit of pent up demand, or do you reckon that wealth have 2021 such a pace and such accelerated deal wins could continue? The reason I also ask is that when I look at the guidance, for example, given by some of your other peers who I've spoken to in the past 1 week, uh, the guidance doesn't give the confidence that Q4 itself will be as strong and as different as Q2 and Q3 have been for the sector. So one wonders whether 2020 was, just that pent-up demand and a different year. And now it's back to normal from starting the fourth quarter itself.
No, at least I don't see that way. I don't see that as a pent-up demand as the reason. Yes, of course, in the beginning of the crisis, during the April, May, June, there was request for a short-term peaks of certain capacities, of certain competencies, especially to make the employees work remotely and so on. But after that, if you look at the projects and programs that we have been engaged, it's not the short-term demand. It is essentially to meet a larger agenda of digital transformation of our customers. And we do believe that that trend will continue. Look, in terms of specifics, whether Q4 will be bigger than Q3 and all is very difficult to comment. I think the global markets are still under stress, because of the second wave pandemic, and though the vaccine rollouts are happening, but we, from a Mindtree point of view, we are confident about our strategy yielding results, and we will continue to focus and leverage the good pipeline that we have in our system.
Yeah, but I actually thought that actually is working in the favor of IT vendors, right, or companies, or the Indian IT space at large. This whole needing to be tech enabled and almost all industries now jumping in could actually work. So the second wave hopefully doesn't happen. But if it were to be there, and if lockdowns were to be there, etc., that might not really hamper the growth rates too much, would it?
Well, I think it's not that black and white, to be honest, because yes, the digital and the technology has played significant role in keeping the businesses more sustainable, more viable, and also serve the larger purpose in the community. But at the end of the day, you want this crisis to get over, right? So you want the consumption to improve, you want the demand to pick up for our customers. So in that larger context, obviously there is still a stress out in the market. But as long as we create the value and a customer engagement, we are confident of Mindtree's growth.
Just wondering, as you see it at the start of 2021, how do you see the different verticals? I mean, I think you've done a new healthcare vertical, if I'm not wrong.
Yeah.
Again, travel did very well for you for quarter 3, again, if I'm not wrong. How do you see either the quarter 4, if you want to talk about that, because the visibility for 4 quarters might be difficult, or for the year at large, where do you have the most confidence and why?
Sure. If you actually look at our Q3, we had a broad-based growth, right? So we grew almost in all our industry group, and we had a moderate growth in BFSI. We had a double-digit growth in TTH, and 5% plus growth in CMT and so on. I do believe that we will continue with a sort of a similar pattern of spend from our customers, right? The retail and CPG customers will continue to spend to increase their, the omni-channel experiences to reach out to the consumers directly, and BFSI will continue to invest on the tech modernization, on the product development models, as such, and travel and transport, hospitality customers. I think they'll continue to invest in sort of enhancing their contactless experience, right? The contactless experience is going to be the new normal of that business, and so there'll be more of investment coming in that area as well. So I think though it is still a sector which is still under a significant stress, but we do believe that the sort of a trend that we are seeing on the spend across our sectors will continue for the next quarter as well.
Okay. Last couple of questions. One, I know you referred to it twice already in the interview, but I'll still try my luck. It might be difficult to give an exact idea of what Q4 would look like, but would you reckon that the growth rates with which you've spoiled your investors in the last 2 or 3 quarters, let's put it that way, you reckon some flavor of that could be expected in the quarters to come?
Look, as I said, we do see a good momentum in what we're delivering. If you're asking me, can I give an exact percentage? Unfortunately, I can't. But I can give you a sort of a trend outlook, and which is extremely positive, for the near-term future, at least for Q4.
Okay. One more question. I get this varied commentary from a lot of companies, and you are a company which is kind of, for lack of a better word, if I look at over the last decade, transition from being a smaller company to amongst the largest companies now. I hear varied versions from different companies. Some companies believe that because of multi-country, multi-vertical capabilities, the larger IT vendors would be in a better place to get the lion's share of all outsourcing work that comes in from across the world. And the smaller companies say now that because of work from home and because of the fact that every company is so digitally capable, there'll be a blurring of lines between the size of the company. It will be individual vertical specific capabilities that will come to the fore. Where are you on this argument?
No, I tend to agree on the later part of your, that you explained in your question. The size and scale matters to a certain extent when you look about, the deals which requires a geography presence across 100 countries, 70 countries, 80 countries, and so on. But if you actually look at the deals which has a significant digital transformation, which could be delivered through a cloud-based solutions and so on, the location spread really doesn't matter, nor the size and scale matters. What matters is how good are you on those specific competencies, how good are you in understanding customer business, and how good are you in actually delivering those services at faster time to market, right? So it's no more the size, it's the agility and the speed and the faster time to market that differentiates.
And I guess from your comments that I've read, you are seeing traction across verticals, across capabilities, and across deal sizes.
Yeah, look, I think the 4 service lines that we said as core part of our strategy, which is the customer success, everything to do with the front end, and cloud, which is the biggest catalyst for the digital transformation, data, which is an integral part of everything that you do around digital, and of course the tech modernization around enterprise IT. So we do see our strategy is actually to build differentiation around these 4 service lines that we operate across the 4 sectors that we do. And so hence, when we work on the deals across these 4 service lines in those 4 sectors that we operate, we are as good as anyone else, right? So we are extremely competitive in that marketplace.
Last question, can't not ask this to a PIO or an NRI or an Indian. How happy were you with the Indian team's performance?
Well, delighted. No, very delighted, extremely inspirational also, I should say. Just watching that fearless attitude and go and win in Brisbane, that's really pleasing. And I actually started my day with such a positive note, and it's great to hear that.
Yeah, I just tweeted that 2021 has got off to a fabulous start. But
it's fabulous. I think cricketers are making us a lot happier. So thanks to them, great and well done.
Anyways, but keep up the good work. Great show in Q3. May it continue. Thanks so much for speaking to us today.
Thank you for inviting me. Thank you.
And viewers, thanks for tuning into this conversation with Mindtree.